All right, let's talk about Snapchat and because this one exploded. Right after earnings, the stock jumped more than 25% in a single day. So what happened? Why did investors suddenly fall in love with Snap again? And the big question, but is this just hype or is there real growth behind it? Before we dive in, quick reminder. This video isn't financial advice. It's all based on public info and personal analysis. Always do your own research before investing. So here's what went down. Snap just reported its third quarter results, and they actually surprised to the upside. Revenue came in around $1.5 billion, up roughly 10% year over year. That's solid. It shows advertisers are slowly coming back. They also grew their daily active users to about 477 million, and monthly actives close to 943 million. That's a huge base. Now, Snap's still not profitable. They reported a net loss of about $104 million, but that's narrower than before. So yeah, it's still bleeding a bit, but the trend is improving. In short, solid revenue beat, user growth, smaller losses. But the real reason the stock popped, that came right after. So right after the earnings release, Snap dropped a bombshell. A $400 million partnership with Perplexity AI. Basically, Snap's teaming up with one of the hottest AI startups out there to bring AI-powered search and discovery tools into Snapchat. That changes the narrative completely. Suddenly, Snap isn't just a social media or messaging app anymore. It's moving into the AI space, the same buzzword that's been driving stocks like crazy all year. And markets love a good story. That one announcement alone made traders pile in, and the stock shot up over 20% in after-hours trading. Now, does this partnership instantly make Snap more profitable? Number. But it shows direction, it shows ambition, and Wall Street reacts to that. Let's not forget, Snap's bread and butter is still advertising. And this quarter, they finally got some traction again. Their direct response ad business, that's the stuff like app installs or purchases, grew around 8% year over year. That's a big deal because Snap had been struggling to convince advertisers to come back after Apple's privacy changes. On top of that, engagement numbers look solid. More than 350 million people are using Snap's AR features every day. And their AI lenses, those fun filters, got used over 6 billion times in just one quarter. So yeah, people are still using the app a lot, and that's what advertisers want to see. Now, it's not all sunshine and rainbows. Snaps is still losing money. That $104 million loss may be smaller, but it's not gone. And management warned that next quarter, Q4, revenue will probably land between $1.68 and $1.71 billion. That's decent, but not exactly moonshot growth. And then there's regulation. Governments are tightening social media rules, especially around teen safety and privacy. Plus, Snap's up against monsters like Meta and TikTok who are throwing billions at AI and ads. So while this quarter was strong, the competition and the costs are still serious challenges. The stock exploded, up roughly 25% after hours. Now, that's massive for a company this size. And why? Because markets didn't just see an earnings beat. They saw a story shift from struggling social app to comeback kid, backed by AI buzz and improving ad sales. Now, whether that jump holds up is another question. Right now, the valuation's starting to price in a lot of future success, maybe even too much. So if the next quarter doesn't show the same energy, the stock could cool off fast. Here's the thing. Beneath the hype, Snap actually is improving. User numbers keep climbing, engagement is sticky, and their ad platform is getting smarter with better targeting and more data-driven campaigns. Even free cash flow is improving, around $93 million this quarter, up about 30% year over year. So while they're not rolling in profit yet, the direction is right. They're tightening operations, growing users, expanding features. That's what long-term investors want to see. So where could Snap go from here? Let's talk scenarios. Scenario 1, cautious. The stock got ahead of itself. And the AI deal sounds great, but it doesn't translate to real money right away. Costs rise, profits stay weak. The boom correction. Scenario 2, optimistic, Snap pulls it off. The AI integration works, ad revenue keeps climbing, and they start generating consistent profit. If that happens, today's jump could just be the beginning of a real turnaround story. Either way, this is going to depend on execution, not headlines. So here's how I see it. Number 1, separate the hype from the progress. Snap's improving, but it's not a guaranteed comeback. Number 2, time horizon. If you're short-term, expect volatility. If you're long-term and believe in their AI and ad growth, it could be worth watching. Number 3, position sizing. Keep it reasonable. Snap's still a smaller player in a tough market. And number 4, pay attention to Q4 and next year. If they can keep ad growth above 10% and reduce losses again, the stock might finally have momentum. So what, should you buy Snap after this crazy jump? If you're chasing short-term momentum, careful. Stocks that pop 25% in a day can fall just as fast. But if you're in it for the story, the AI push, the user growth, the improving fundamentals, this might be the early stage of a bigger comeback. Personally, I think this quarter showed something important. Snap isn't dead. It's fighting back. But it still needs to prove it can turn growth into profit. Either way, can base your decision on facts, not FOMO. And hey, if you enjoyed this breakdown, hit that like button, drop a comment, and subscribe. It really helps out the channel.